All right, guys, this video is actually part of a four-part series where I am covering everything that you need to know about accounting and setting up your books properly for online e-commerce businesses. So in this series, I'm actually interviewing a boss of a company called CapForge Accounting, which is a CPA office based out of San Diego that represents over 850 online brands and does their bookkeeping and their yearly taxes for these companies. When you're working with over 850 online brands and diving into the back ends of their books and seeing what's going on in these types of businesses, you can imagine that they have seen everything. They work for brands that are just starting out, not even doing $1,000 a month. And they also work with brands that are doing over $100 million a year in revenue. So their team is absolutely amazing. So I've had the pleasure of actually taking this interview and turning it into a four-part series where we cover some of the biggest mistakes that online e-commerce store owners make when they're starting their businesses with their accounting and their bookkeeping. So this part of the series is actually part two. In this video, we're talking about the significance of accrual versus cash accounting for your online brand and what that actually even means, as well as why doing SKU-based accounting for your online brand is super important. I am a great example of what not to do, and I actually learned a lot during this interview and why my books ended up being so bad when they took me on as a client. By the way, guys, my name is Hannah Gardner, and if you are new to the channel, we talk about anything and everything that has to do with e-commerce and selling things online, building brands, launching products, everything. Yeah, you get the picture. We are gonna just go right into it and hop into the interview with Matt Ramuzzi. The next big mistake that we have here is cash versus accrual accounting. Why does that matter? What does that even mean? What does that look like? What is that mistake?
Sure. So cash and accrual accounting, not to get again too deep into the jargon, but there's two basic ways of keeping track of sales and expenses. One is cash. Cash is definitely the easier, more simple, straightforward way to do it. It basically looks at what came into my bank account and what went out of my bank account. And on the surface, that seems like, well, that should be what it is, right? Every 2 weeks I get a deposit from Amazon. I'll record that as income, and then every so often I buy inventory, and when I buy inventory, I'll wire out an amount to my supplier, and that should show me how the business is doing, right? And I go, well, to an extent, yes, right? So when you get deposits, that's income. The business looks like it's doing okay. Those months where you have deposits and maybe you didn't buy any inventory that month, it might look like you're having a great month because you've got a bunch of money coming in and hardly any going out. And then in the next month, you have a huge inventory purchase and it looks like you lost money that month, right? You have $25,000 came in and $50,000 went out. So it looks like you lost $25,000. Like, wow, my business is not that great. If I kept up like this, I'd be out of business in a few months. That's cash basis accounting. And while it does show you what cash is coming in and going out, it doesn't really help you understand how your business is doing. What accrual accounting does, and this is the way we do all of our e-commerce clients, is we actually look at from the top to the bottom what your activity is, not necessarily when the cash happens that relates to those activities. So for say the month of May, we would look at how many total sales did you have in the month of May? And we would take that information from your Amazon accounts or whatever other platforms you might be selling on and say, okay, you sold $50,000 worth of products through Amazon in the month of May. Now, Amazon takes their cut, which might be, $18,000 out of the 50,000 in sales, and then we'll record that. So $50,000 in sales, less refunds and promos and rebates and so on, and then less the Amazon fees. And then we'll get down to the amount that they actually deposited in your bank. But we want to not discount all that total amount that you sold. Then we'll look at what was your cost of goods sold. So not did you buy a bunch of inventory this month or not, but how much of your inventory did you actually ship out in the month of May? And let's say, you have 10 different SKUs and you sold 100 of each SKU, so 1,000 altogether, and your average SKU cost was, $10 per. So you sold $10,000 worth of inventory in the month of May. You may have actually ordered $50,000 worth of inventory in May, but we're only going to compare the cost of the inventory you shipped against your sales. So that way you can see, all right, I had $50,000 in sales. I paid $18,000 in Amazon fees. I paid $10,000 for the cost of the products that I actually sold that related the result of that $50,000 in sales. And then I had some ad spend and some expenses, and then I had some profit. By doing it on an accrual basis, we're ignoring the fact that you might have bought the inventory that you sold in May back in February. And we're also ignoring the fact that your May sales, you may not get that check from Amazon until sometime in June. We're lining up your sales with your fees and your cost of goods sold that you sold in that month and your other expenses. So you can see month by month, how am I doing? Am I profitable? Am I selling more this month than last month? Am I paying more or less in fees? Am I selling my products at a profitable rate? And how much profit is left over after my other expenses? That's a accrual method of accounting. And it just gives you an apples to apples comparison. So you can see month over month how you're doing, not the cash basis where some months look great because you had a lot of deposits and no inventory buys, and other months look terrible because you bought a lot of inventory and only had the deposits to offset that. So that's the difference between cash and accrual, and why doing accrual is so important to let you see really how the business is doing. And the other important piece for accrual is if you're deciding to sell your business at some point, the accrual version gives you a much higher valuation. If you only look at cash basis accounting and then you give it to a potential buyer to value and sell, you're going to get a much lower offer if they make you an offer at all versus the exact same business, exact same results done on an accrual method. That is going to give you a higher valuation. So you're going to be able to sell the identical business for significantly more money just by doing the accounting differently, even though everything else is literally the exact same business.
And have you seen that a lot of people coming in that have messed up books? I think I was cash-based accounting when I came in as well. That's the narrative, because I guess that kind of resonates not just with e-commerce. That's also just like any brick and mortar, by any business buying mass quantity of inventory, I would assume. But I mean, just from personal experience, like, I mean, obviously there was a lot of other things messed up with our books, but that end of the year number was like, we were just basically expensing all of our inventory. And my dad was telling me over and over again, that's not the right way to do it. That's not the right way to do it. And I'm like, I don't know, it just makes the expense line look higher. But yeah, it's just when it comes to just the overall thing of like looking at your books, you're like, wow, I literally have no idea what I'm making at the end of each month. So super important.
The accrual basis, really gives you that good month to month comparison. And there is sometimes people get confused too, because they're like, well, I know I file my taxes on a cash basis, so do I have to do my books on a cash basis? Or if I do my books on an accrual basis, do I have to now change how I pay my taxes? And the answer is not necessarily. You definitely want to do your books on an accrual basis. Whether you pay your taxes on cash basis or accrual basis is a separate decision. And doing your books one way or the other doesn't dictate how you file your taxes. So sometimes people get confused about that, or they say, oh, my CPA definitely said I'll save more money if I file my taxes on a cash basis, so I want to do that, which is fine. You can have that discussion with your CPA or make that decision for your taxes, but that's really separate from how you do the books. And you really don't want to stick with cash basis accounting for your books, even if you want to file your taxes that way, because you want to run your business with the best possible information. And that's the accrual method, even if you at the end of the year file your taxes differently. So regardless of that, do your bookkeeping accrual and then make the separate decision for your taxes. But yeah, if you're just doing cash basis accounting for your bookkeeping, it's really hard to know where you're at.
Exactly. So that kind of leads us into the next mistake, which is if you're going to be doing the proper way, which is accrual, why is it so important to make sure that you're tracking profit by SKU and having SKUs and costs in your product reports? So then when you go do that accounting, everything shows properly. So what is that? Can you explain kind of what that does and how without doing that, you're kind of setting yourself up to be in a really rough position like myself what we're going through right now?
Yeah, I mean, in the early days, right, when you have one product or two products, it's pretty easy to know where you're at, right, if they're working or not. But what happens with people over time, or depending on the product category they're in, right, they add more and more SKUs. Sometimes it's because you have a product that has sizes and color variations, and so you have a, a parent product, but lots of different variations to see kind of how each one is doing. Or you just start adding products, right? You start out selling wallets, but then you add different styles, and then you add purses, and you add bags, and you add other accessories, and before you know it, you're selling 40 or 50 SKUs. And if you're just looking at how am I doing each month from the total, you go, oh, well, every month I'm making more money and I'm making profit. I've got, 50,000 in sales and it says $10,000 in profit. So everything must be great, right? But we really want to dive in and look at not just how am I doing overall, but how am I doing by SKU? Because what we often see, once people get over about 10 SKUs, they really start to lose track of that if they're not careful, either using software that gives them a per SKU profit, or working with somebody like us that can do the report for them. And what starts to happen is some of those bottom SKUs, they don't get around to checking on, hey, is it still ranking well? Is there more competition? Should I be updating the price? Is my ad spend still tracking? And what happens is over time, some of those bottom SKUs, bottom in terms of what they're providing, get maybe down to just where they're breaking even, which is in a way a loss for you, right? Because if a SKU at the end of the day, you're not making any money on it, you might as well put that money into other products that are profitable. Or we've even seen clients where the bottom 10% or even 15-20% of their SKUs are actually losing money by the time you factor in their holding costs, their per SKU costs, their ad spend on those SKUs. For each one they sell, they're losing $2 or $3 or $5. So how many of those do you want to sell where every time you sell one it costs you $5? But if you're just looking at the top line and saying, well, overall I'm doing well and I'm profitable, that's great. But you might be that much more profitable if you
Mm.
stop selling those bottom 10% of SKUs, or at least reprice them, or cut your ad spend on them, or talk to your vendor about getting better pricing, or whatever, or some combination of all of that. But if you're not paying attention on a per SKU level, it can be really easy to let some of those SKUs fall into that category where they're either just breaking even or actually costing you money. And now not only are you losing money on those SKUs, but the ones that are making money are now carrying the weight of those other ones. We actually had a client, we did this analysis a while ago. He had about 100 SKUs. The bottom 25 were losing money. And by the time you added up to how much did he have to sell of the profitable SKUs to cover the losses on the bottom, it
Mm.
turned out that it was really only the top 10 out of 100 SKUs that were making him any money. The others, the ones from 11 down to 75, were covering the losses of the ones from 76 down to 100. So literally 90% of his business was just churning cash, and he was seeing zero return on all that effort, all the money he'd tied up, all the orders he'd placed, the shipping and tracking and all that stuff. All of that was for zero return on that time spent. So it's
Mm.
something you want to be really careful about. When you've got one or two SKUs, it's easy to see, but as your business grows, really keep an eye on not just is the business profitable, but SKU by SKU. How am I doing? Are these still all making sense for me to carry and sell at the price that I'm selling them at?
100%. So is that, I guess, you're doing the accounting, but it's going into a deeper dive look as far as like consulting. This is like a service that you would say that you offer as well, doing this.
Yeah, definitely. I mean, not every seller needs it, and some of them that do only need it, once a quarter, not once a month or once every 6 months. But it's definitely something that we can work with clients on to make sure they understand, where their products are at, which ones are working, which ones aren't, and then armed with that information, they can make good decisions. But if you never look at it,
Right.
chances are, you're costing yourself money and not even realizing it.
100%. Wow, that's great. All right, guys, if you got any value out of this part of the interview, please do go ahead and like this video, ask any questions in the comment section, and subscribe to the channel. And if you are interested, remember this is a 4-part series. Please go ahead and watch the next part, and I'll see you in the next video.